And hello, everyone, and welcome to today's webcast, Underwriting's Role in a Profitable Insurance Business. This event is sponsored by Appian and Insurance Networking News. Today's insurance underwriters are under constant pressure. They have to make fast decisions about which risks to accept and how to price them. Yet the data underwriters rely on is often sent by email, fax, or mobile devices, or else resides on backroom systems using multiple platforms. Dealing with data in different forms and from disparate sources makes critical tasks like data validation difficult, further inhibiting speedy and informed underwriting. The advent of more complex and specialized risks from aviation to terrorism also add to the growing challenges for underwriters. They are often faced with having to compromise thoroughness and risking profitability in order to respond quickly enough to gain market share. But technological innovations have also created new opportunities for insurance underwriters to grow business by better aligning processes and data. By moving to a common integrated platform that delivers data and processes to individual underwriters, insurance companies can add actionable intelligence to decision-making. And in today's webcast, we have three industry experts who will discuss how to balance speed, risk, and return to drive underwriting profitability and growth. But first, I'd like to remind everyone that our presenters will be responding directly to your questions later on in the webcast. So if you have a question, please type it into the question field on your console and then submit it by clicking the Enter button. We really encourage everyone to do this, and we will answer as many of your questions as time permits. So, right before we get going, we have a poll question, which is very simple. There are only three answers to this one. What line of business best reflects your focus area? So, folks, if you could take a second, just click one of these radio buttons and press the Submit button, and we will get back to the poll results in a moment. But first, I'd like to kick off our webcast with Deb Smallwood, founder and partner of Strategy Meets Action. Deb is highly respected throughout the insurance industry for strategic thinking and thought-provoking research. She has a long record of helping insurance companies rethink, re-energize, and retool their IT infrastructure for profitable growth and differentiation. Insurers and solution providers turn to Deb for guidance on business and IT linkage, strategy, and architecture. Deb has deep industry knowledge and experience and specialized understanding of distribution, portals, agent connectivity, and underwriting automation. She is also a frequent contributor to leading insurance trade journals and a popular keynote speaker at major industry conferences. Today, Deb will discuss the significant changes affecting insurers and how the role of underwriters is evolving to create new opportunities. Deb, let me just bring up the poll results here for you, and the floor is yours.
Great. Hello, everyone. Thank you, Andy. I'm thrilled to be part of this webinar. As many of you that might be on the webinar, underwriting automation, especially in commercial lines, is a real passion of mine, and it's really been somewhat of a professional mission since my early days in 1989, 1990, when I worked on business reengineering initiatives at Liberty Mutual and also worked on a project called an underwriting workstation, if you can believe it or not. That was on an Apple Macintosh computer back in 89, 90. And so I've seen and have seen the vision of underwriting automation, and it's really amazing as we're in the 21st century to be where we are. So today I'm going to give you my perspective on underwriting and try to create that picture of that next generation underwriting model. So I'm going to be sharing with you some strategic insights and some SMA research. We did ask the question, I don't know if we saw it don't recall seeing the poll results. We asked the question around what line of business, and if you look, it was mostly P&C requests, and I'm looking at the attendees, and we do have some life and some health folks on the line. I guess when you think about underwriting automation, you really have to look at today the lines of business, and you also have to look at the levels of automation. And what we tend to see in personal lines is high volume automation where there's no underwriter at all, and you can even see some of that in term life, and you even see that in small commercial. Though my conversation, and I believe the majority of what we're going to be talking about is not only the underwriting process, but it's that role of the underwriter and when an underwriter is needed. So even for simple personal lines risks, right, there are exceptions that things get bumped out. And it's really that work of that underwriter in their day-to-day of what tools and technologies and access to data that they'll have. So that's why we teed up that question. Before I get started, Strategy Meets Action, strategic advisory firm. I'm the founder of the company. We provide a variety of services, consulting, advice, and research to insurers and solution providers. At the bottom, you can see the variety of topics that we cover. And part of our mission is really to influence, guide, and consult with insurers and solution providers to create that next generation insurer. We believe that there's so much opportunity around us and so much change that we have to start rethinking the business of insurance. And you'll see this next-gen insurer model a little further into the presentation. I'd like to start off with talking about some of these external influencers that will force us to rethink our underwriting business model. And at SMA, we track these external influencers, and this year we decided to call them the 4 top game changers. And the 4 are significant capital. What we mean by significant capital is there's a lot of outside money being invested in what I would call disrupting the industry. So there's VC firms, there's hundreds of startups. According to CB Insights, up to $2 billion was invested last year in startups specific for insurance. So startups are startup insurers, startup MGAs, startup brokers. There's startup technologies for comparative raters, technologies for customer experience, and even technologies for risk assessments and helping us mitigate risk. And when you see a lot of money from outside coming into an industry, you know that there's disruption in the horizon. And so many are betting on disrupting, and I would say not let others disrupt us, but let's seize this opportunity, right? And we also know that other game changers are changing expectations, customer expectations, so that's policyholders, agents, brokers, MGAs, and even the role of the underwriter and the role of people in the underwriting department. We have new generations, and even some of the baby boomers have different expectations in terms of how they interact with companies. And we also live in this digital transformation world, right? We live in a connected world that's all digital, that really is enabled by our mobile devices that have only been mainstream for maybe 5-6 years. And so the impact of that and the presence of the digital world is you can see, putting pressure on our industry. And last, we have an assortment of emerging technologies and new sources of data. And the emerging technologies are somewhat physical, so it could be sensors, Internet of Things, and wearables. It could be drones. It could be driverless cars. Or it could even be some of these virtual technologies like artificial intelligence, technologies, semantic technologies, some of these things that are more virtual. But at the end of the day, these emerging technologies are going to create an amazing amount of actionable movement of data, new sources of data that is going to influence our products, the way we underwrite, the way we price, and the way we service. So when you look at these 4 external game changers, they're putting pressure on insurance, and what better way to really think about underwriting, right, and create opportunities and just manage those threats. So just to reiterate, the opportunities are these changing expectations is going to create some new coverages and new products that will start to put pressure on our underwriting department, and it's going to really force us to improve our operational efficiencies. As I go through these slides, some of the pain points and the manual handoffs that we have, if we're going to start to have new sources of big data, new coverages, new products, think about the training. How are we going to be able to do it in our world today, right? And we have to view these as opportunities. Sure, there's new risks. There could be disruptions. There's going to be new entries. You could even think about technology running amok. But I believe that if we look at this holistically, we can create a new underwriting model. When we look at a next-gen insurer model, you can put it in the context of underwriting. So in the middle and the center, we have to be innovative and really create a culture of change. So if we're looking at the underwriting department, and it doesn't matter if it's life, P&C, specialty lines, right? We have to think differently about our customer. Our customer could be the policyholder. It could be the broker. It could be the agent. Customer could be someone internally within our organization. We know that we're going to have next generation of products and services with these Internet of Things and sensors, and we have to look at our business models. How do we make money? How do we run our operations and take advantage of the technologies and the data of such? And what this really gives you is really a connected view or a connected lens of a next generation insurer or next generation underwriting department. So thinking strategically, right, lots of opportunities, lots of potential. When we look at our research of strategic investments, the industry is moving forward. There is many transformation initiatives. In fact, I believe over 40% of insurers state that they're in some type of transformation, let it be claims, let it be underwriting, let it be core system transformation or transformation from customer experience. What we're seeing is that 86% of insurers are investing in data and analytics, and it's everything from master data management to operational data stores to warehouses to applying new sources of data, and some very few are experienced in a Hadoop or big data platform, but we're seeing movement there. Many insurers are working on that whole customer experience, and so with the implications of that to underwriting is possibly new channels, possibly providing self-service to agents and brokers, possibly providing some self-service capabilities to our policyholders. And then we're also looking, we see the new products and services, and small numbers down at the bottom are kind of playing around with Internet of Things, 24% in some type of pilot. But what I find really fascinating is that we're still in deep for core system replacement. And 80% of insurers, both P&C and life and annuity, state that they're in some type of core system transformation. Let it be that they're looking for funding, doing vendor selection, maybe in the first release, maybe 3 years in it, and still working on many lines of business in many states. But we're totally consumed by that. And what we often see with core system replacements is the novelty or the message that it will automate underwriting. And we know for a fact that it does. Its policy admin systems are absolutely essential to create that platform. And for those simple risks that I talked about earlier, those that can be automated and don't need an underwriter, sure, it can present workflows and rules that can create automation. But what our research shows is that for complex risks, so this is complex middle market risks, those risks that require an underwriter, those policy admin systems only support 35% of the underwriting process. So let me say that again. When you look at even, this is not just legacy, this is a modern policy admin system. I have been, in the last year, I have seen anywhere from 8 to 10 different site visits watching underwriters with modern policy admin systems working on large accounts, working on work comp policies or specialty policies, and the majority of their work, I would even say even more than 65% of their work, is done outside the policy admin system. Now, that's not the fault of a policy admin system. Policy admin systems do a lot of capabilities. They are the system of record. They handle the transaction. But it's all those tasks that they do as an underwriter is outside the realm. So it'd be fascinating. I think we have a poll question coming up. What percent of your system helps support that underwriting process? And what's even more fascinating is that the pain points are still real, and they're still the same pain points that we had back in 1989, 1990 when we were doing re-engineering projects at Liberty Mutual for middle market commercial, right? There's still communication delays between agents and underwriters. So back in 89, 90, we had phones. We didn't have email. So now we have email, we have texting, and email actually has probably even created more complications in terms of delays. So we have delays. We're still manual and paper-driven processes. Can you believe that? It's the 21st century, and for those that are activities around underwriting, last year I visited a company that just implemented a core system, and it was a fabulous success. But for those large work comp policies, what I saw was a manual paper folder with a checklist, a manual checklist for the underwriter. So we still have paper, and then when they're done, they shred it, right? So it looks paperless, but when the underwriter, they're still doing paper. Still long turnarounds, lack of the right tools for risk and data analysis, limited visibility. A lot of times in policy admin systems, you can only see a policy. It's hard to see that whole account view. And when we have manual processes and we have manual handoffs and paper, then you really have a trouble with consistency in compliance and discipline, right? So it's really quite fascinating when I've created this chart, and this is based on research, this is based on surveys, this is based on interviews and observations. It looks very similar to presentations that I made in 1989 on the re-engineering project. So it's really, the time is right? The time is now for us to really rethink what that next generation underwriting capabilities are. And at SMA, I've created the 5 I's. And to me, it's around linking people, process, and technology. And I think you're going to hear Joanne and Kate use the word connect. And I believe it really is around connecting the company, connecting the people, the processes, and the technologies as well. So let's step through these 5. What we have to do is we have to create for the underwriter in the underwriting environment, those that are doing things outside of a policy admin system, they need intuitive desktop user experiences, right, that are really productive, focused, and allows ease of doing business, but real intuitive, that it brings everything to the underwriter instead of the underwriter having to go and look. That there's intelligent workflows and rules engines, right? There's intelligence built in based on the risk, based on the customer, based on the underwriter's level experience, based on the market. It could be a variety of things. But we do have available in the market very robust workflows and rules engine. And it has to be interconnected. As I mentioned, this whole connected company, right? It has to be interconnected. You have to interconnect data sources, spreadsheets, tools, core systems. And you're going to have to start to think about how you're going to connect all those emerging technologies and all those new data sources that are going to bring in. And for the underwriter, in that underwriting process, they need information, and they need to be able to conduct that risk analysis. And that's the piece that's really missing from a lot of the modern policy admin systems for complex risk, is that risk analysis where they do really look at the financials, they look at the credits, they look at all this external data, they run different models, they do loss analysis, and they look to see what the final price is, and they can play with the levers and all those mods and experiences. And they look at the policy in the context of the account, in the context of the portfolio. And it really provides insights for them to apply the right levels of what I would call real-time, actionable analytics and insights to that risk in real time, instead of underwriters rekeying information into spreadsheets to do loss analysis. So 5 eyes, really important. To me, if you're going to look at any underwriting automation in the marketplace, those should be top on your list. And what I'd like to do is end with really a call to action, right? So there's 3 main themes for the call to action. One is embrace change. Understand that we may be looking at today's world, an insular world, inside out, looking at our underwriting processes, but don't lose sight of some of those things that I talked about up front, the emerging technologies, changing expectations, the whole digital connected world that we live in, and all that significant investments that's happening on the industry, because there are game changers happening that will impact our products, the way we price, the way we underwrite and service our customers. And really start to get really clear about what does next-gen underwriting look for your company, right? And start to think beyond the policy admin. If policy admin is part of your roadmap, that's great. That really has to be foundational. Some of these legacy systems in a batch mode aren't going to do much, right? But be mindful that the solutions out there in the marketplace really don't have the capability that we're talking about. And start to link and think and connect the people in the underwriting department, the people across the company in claims and loss preventions that work with underwriting, then connect the agents and the brokers and the policyholder with your processes and your technology. That's all I have. I'd like to hand it back over to Andy. I believe we have a poll.
We do. We actually have 2, and here's our first one, Deb. Does your company have an underwriting platform or workbench in place? And again, we have 3 simple answers to select from. So I'll ask our viewers to quickly vote and hit submit, because we don't want to dwell on this screen too long. And
let me just clarify this. So I didn't talk much about a platform or a workbench, but do you have technology for underwriting that sits above and around the policy admin, right? So do you have one that sits across everything in all your core systems and all your tools? Do you have many different tools, or you really don't have any automation? So sorry, Andy, I wanted to just clarify that question just a little more so people know how to answer it.
Not at all. Good to have that there. So let's look at our results. Split pretty evenly, I'd say.
Yeah, so that makes sense. Our research shows that the majority of the large insurers, those that are the market leaders in commercial lines, they have that one system that sits on top of all their product lines and all their systems. We know that many have many tools. That's about a third, which makes sense. And there are many that don't have anything, that it's all manual on paper, in Excel spreadsheets, unintegrated, not integrated with policy admin. So this is a good reflection. So we have lots of opportunities for 2/3 of the industry, right?
Definitely. Let's go into our next poll, or second poll here. How much of your underwriting activities in a typical day in your life would you consider supported by the workbench?
So remember, I talked about 35% being supported by a policy admin. So this one is around the workbench. So if you've got some underwriting tools, how much of that role of the underwriter in that underwriting process is supported by that 65% that we're looking for?
Here we have our answers. Looks like most are between half and 2/3.
Yeah, so I think it aligns, right? So it aligns to that one system. A third had about one system over everything, and we have about 36% at the 55 to 75%. So that aligns. Again, still lots of opportunities for us to improve. Great.
Well, thank you, Deb. And thank you, Deb Smallwood, for your presentation. Next up is Joanne Courier, VP of Information Technology at Vermont Mutual Insurance Company. Joanne has more than 30 years' experience in the information technology field as a staff programmer, analyst, and development manager. She's active in the IT committee of the Property Casualty Insurers Association of America and is a former president of the Wheatley Insurance Systems Customer Board. Today, Joanne will discuss how Vermont Mutual has evolved its agency portal to deliver agility in responding to change, integrate seamlessly with third-party data sources, and communicate better with customers. He will also show how Vermont Mutual has implemented a one-stop shop for underwriters to access all the information they need to evaluate risk and support profitable growth. Welcome, Joanne.
Thank you. Thank you very much, Andy. Good morning, everyone, or good afternoon, everyone, I should say. I guess where I'm starting on my slide is that I am trying to follow up with what Deb's comments were. Deb made some key points that are very consistent with where Vermont Mutual is as well. And I think that I'm already, is my slide, am I on the wrong slide already here? Sorry, guys. This is where I want to be. So I'm taking Deb's slide. And you can see at the bottom, I've put some plus signs where I think we're doing well, and in an area that's yellow is where we need to improve. So just backing it up a minute, I want to make a point that when Deb talked about these pain points, they definitely are consistent with Vermont Mutual. We haven't solved the world's problems. We have a lot of work ahead of us. We're still in the early phases of this implementation. But they asked me to put together kind of an explanation of some of the things that we're doing that are a little bit different than most of the other carriers are doing. And in the area of the agent and underwriting communication delays, we're really looking at, and I know many of you are in different ways, and I would like to reiterate that there's more than one way to solve a problem, and also that no way is an easy way. But in the agent and underwriting communication delays, obviously we're trying to do real-time rating wherever we can. We want to have dynamic screens that present only the information and questions to our agent that make sense for what they're writing. We have a lot of cross-edits and rules that are built into these engines now that basically, if it's an ineligible risk of what Vermont Mutual isn't going to write, the agent sees that right up front before they submit the business. So that kind of leads into the next portion where everything, as much as possible, right now we're focusing on our personal lines first because that's our greatest volume. We're trying to get everything as electronically submitted by the agent as we possibly can. So our new system allows them to attach copies of the application, any photos that they have, and all of that feeds into us electronically. The way that the questions are worded in the application and then the coding and then into the application process, we're getting a much cleaner application, but we're asking simple questions. We're not asking questions that they typically skip over, so we try to make that process as easy as possible for the agent, but meaningful for both them and for us, which then helps us in the back end on our underwriting discipline, which is the last bullet there. A lot of our business rules or our underwriting discipline is being executed through those rules that helps, it automatically fires, and wherever possible, we do have the straight-through process, and then we're trying to refer only the exceptions. This also, in the back end of the system here now, what's happening is that underwriters used to have to review the entire application to understand what the risk was, and now with the business rules, they're able to see the results of the business rules, and they're very targeted to what it is that they have to follow up with. So they can be on the phone and talking to the agent and adding value with those exceptions rather than things that are clerical. The other points I wanted to make is the long processing time. Obviously, our target is to be as real time wherever possible, getting those clean submissions so we eliminate those rework cycles, and that's the back and forth of, oh, they don't have this complete thing. It stays with the agent until they're ready to submit the information. Deb spoke a little bit about all the different data sources that exist. We're not doing anything that's rocket science here. We're integrating with the common ones that you all are, but we also anticipate that there's going to be different ones as time goes on, and we want to have a flexible and scale enough solution that allows us to not only meet the needs of today, but also allows us to do better, be adaptable to that as things go on. We pre-fill or present that data wherever we possibly can. So the area that we're still working working on, because we're in an incremental rollout, is the area of the multi-line accounts in the books of business. We just don't have everything connected for that yet to do the single view of the customer, but that is certainly on our radar to do. The next slide, I just want to talk a little bit about all the different various puzzle pieces that we all have. There's the common ones that I've outlined here with the portal and scanning and indexing and how we get our information. We all have some sort of back office system that supports the policy administration data. But as I talked about, there's a lot of changing expectations and the future technology that's going to come in. We want to have something that we don't have to keep. We can just change out some of these puzzle pieces and replug in, and that we will still have a connected solution. So some of these are commodity issues that we all need to consider, but we need to kind of be mindful of the fact that, well, in our case, we deal through an independent agency channel. So in some cases, whether we create a very fancy-dancy system, it doesn't matter if our agents start their workflow within their agency management system or their comparative rater system that might be really old technology. We still need to support those multiple channels and allow that data to come in and then populate our systems in a clean way and make that transition for the agent as seamless as possible, so that ease of doing business is a big factor. So again, we have to deal with the old and the new technology of our business partners, whether it's primarily our agents, but there's a lot of third parties that are out there that they aren't necessarily adapting to the modern systems as quickly either. So that's always something that is a roadblock for a lot of us. Going into the next scenario, what I wanted to talk about was the modular modernization and being connected. There's a lot of actions that we now unify with this technology that we're using, the platform that we're using, and trying to keep a lot of transparency within the business. So within our new technology, we are trying to connect the people, the processes, and the technology. We are using the Appian product. It is a mobile-enabled product. It is a tool. It's not a product that the solution was built out of the box. So there's a lot that we have done and invested time and energy and work very closely with our business on the process that we want, trying to streamline that effort for both the underwriter, making it easy for them so that when they get the information that they need, they're not doing that clerical overhead work, but that the time that they're spending with the agent is in support and adding value rather than, like I said, that administrative overhead. So that underwriting price and service, all of those things factor into what we're trying to do here with the technology. I think the next slide speaks to it a little bit more with what's been set up with Appian. We have these new capabilities. This is the technology stack that we're running on, or our architecture is a service-oriented architecture. We also have we're using the Appian platform. We're using that for our user interface, basically the BPM. And the look and feel, and basically the way we describe it is Appian's is kind of the brains of the operation. So it kind of anticipates and keeps track of whatever's coming in for intel from the agents and passes it downstream through the workflow process. Corticon is the business rules engine that we're using that replaced a lot of the business logic and edits that were previously stored hard-coded in programs. And this allows for that easy change in rules and cross-edits that we're talking about. So a lot of our user manuals or underwriting manuals, a lot of the rules have been interpreted, so things like the coastal rules, there's just certain things that it will display, and it just makes it a lot easier for the agent so that they don't have to be referring to the manual, although that's quickly available. We try to have as much available within the UI as we can so that they don't have to go looking for stuff. And then, again, the connected part is where the underwriting can be there to add the value to help them with maybe some of the new coverages that we have. If it's not clear, we have some things that come up that you couldn't do these combinations of endorsements because you had picked our enhanced endorsement and you can't pick this other combination, the old combination that you could do kind of more as a monoline coverage. So that's been very helpful as we transition and add some enhancements that it's a lot easier for them to understand. There's actually at the end of the process, not only do we present a nice clean proposal for them that they can use that's printable and easily redirected through email or whatever channel that they want, they also get some cross-sell information information that does some comparisons of the coverages that they chose for against some of our new enhanced coverages that we're pushing or promoting or marketing, that helps them understand better the improved coverage that they have. So that would be just a better example of some of the value add that we're seeing with some of the new technology that we're able to do. From the customer communication channel, we're using a tool called Thunderhead. Some of you may have that as well. That's allowing us to not only replace our policy output and have some scalability and flexibility with our distribution customer preferences and also to the agents, where some agents still want their paper and some do not. Also, as we move forward with our customer portal on the service side, we will have more opportunities available for them or for our customer to shut off their paper or go to the electronic billing. So that's more of the platform of what we're setting the stage. So within this new display that I have up now, the Appian world, there's a lot that we've invested with this tool because there's a lot that happens with the tool as they continue to develop it. As technology changes, we need to keep the tool set updated, but it's very easy to adapt to the changing technologies that might come in. So that's been extremely helpful. And then, like I said, this is the Corticon rules really help with simplifying the information, and I think that having that clean, easy way to do business is really important. With the reporting and alerts and analytics through the BPM process, which is a business process management tool, we're able to gather better metrics so that we're able to track where the piece of business might be, how many things are going through straight-through processing, how many things are stopping through certain edits that we think, oh, why are we touching that? That doesn't make any sense, and we can refine that rule and let more go through, so that the things that are referred are the things that are meaningful touch points with the agent. The collaborative workspace, Underwriter having the rules that they can review of what fired through the process just makes it easier to communicate with the agent, saves them a lot of time, and it makes that turnaround time easier. I would say that underwriting in a connected world, we're trying to add that value. Supporting our agency and our customer as our agent is the primary in this scenario that what I'm describing, and not the clerical overhead. And the importance of that ease of doing business, having that clean, straightforward, and intuitive process. So I'd like to, my last slide, just wanted to reiterate that there is no silver bullet for any of us. There's no easy path whether you pick package or solution or this type of strategy. But these key areas that we were trying to do is making sure that we had ease of doing business, and that allowed us to balance between maintaining our underwriting discipline to the ease of doing business. We don't want to impose too much hardship on the agent as we're trying to submit the business, but we want it to be more of a partnership. In the Agile framework that we've set up, we want this to be very scalable because the world that we live in, the technology is changing at such a rapid clip that we need to be responsive to that. And so the plug-and-playable methodology that's in place with this framework is really going to be a tremendous help to us being able to do that as things continue to change. And just stressing the point that our rollout strategy is more of an iterative process because we wanted to be able to implement this and then continue to change it. So we're rolling out by product by product. So at this point, I think I'm going to turn it over to Andy, and he has another polling question.
Thanks, Joanne, and we do. This is our final poll. Do you think you could benefit from a more connected work environment? Simple yes, no, or maybe. So it'll be interesting to see how our audience feels about this, if they're feeling connected enough presently or looking for more connectivity. And here are the results. Resounding yes. What do you think, Joanne?
Kate or Deb, are you surprised by that result?
No, you mean it's obvious, right? The story that this is Deb Smollett, that I painted and then Joanne talked about, we're not surprised. It's a matter of getting it really prioritized and funded and moving forward, but I think everyone gets it. That's great. We're all on board.
Okay, well, moving right along, our next and final presenter is Kate Gingras, who leads the dynamic, global, rapid growth insurance business unit at Appian, a Gartner Magic Quadrant leader. Kate is a business technology leader with extensive experience in improving the performance of insurance organizations. She's worked across personal, commercial, life, pensions, and reinsurance markets in more than 12 countries to achieve revenue, expense, and compliance goals. Over the past 9 years, Kate has focused on delivering transformative technology solutions that align operating models with digital agendas. Kate will discuss the concept of connected underwriting and how it provides a platform for integrating people, information, and processes. She'll also shed light on how Appian solutions can accelerate the move to a connected enterprise. Welcome, Kate.
Thank you, Andy. Hello to everyone on the phone and on the webinar. This has been a super interesting topic. We hear frequently in the insurance market about connected cars and connected homes, connected devices that give us insight into health and people's fitness and eating habits, but we generally don't hear about connected companies. And it's becoming a very, very prolific topic, if for no other reason that the outside world is connected, and the minute they reach inside, they realize how disconnected we all are. So when we think about frictionless connection inside of our companies and the value and the time that that brings back to each of us in our day, it's not necessarily surprising to hear Deb's statistic about the 65% that are of the work that's really not being connected. There's an interesting study out there that talks about what being disconnected costs our companies each day. And it, of course, varies by line of business. There's a lot of lines, like Deb said, or there's a lot of products that at this point in time with available data sources might allow us to, in the first instance, in, say, new business areas, to be able to go straight through. But that doesn't negate the need for risk mitigation, risk analysis through either the life of that relationship or renewal decisions that are going to come up, or looking at risk from an entire book perspective. So the underwriting components don't ever go away, even if the automation of new business and the theoretical automation of renewals seems to be moving towards straight through. It absolutely varies by multinational. It varies by some of these specialty risks that we see growing in the high net worth area. It varies by mid-market commercial lines. But the underlying evaluation is that about 65, and at the study, it's actually about 69% of what we do is emails, looking to get data in context, manipulating data, re-entering data. And again, it may not be in just one particular area, right? So the new business, it could be throughout the underwriting processes, the underwriting discipline, the emails that we send to external parties to take action, the emails that we send to one another in the company because there's no system that connects us. There's a lot of value in terms of time that we all get back to invest in that which we do best, right, which is to underwrite and protect the profitability of our companies. So there's three capabilities that we generally look at in becoming a connected company. One is simply giving us information, data in context. We spend an awful lot of time going and looking for data because we want context. I think Deb mentioned that it's hard to see in an account in context. Joanne even mentioned having that 360-degree view is tough to get. It's tough to get something in context. So we're constantly searching for the data that will give us the information that we want. And to borrow from a probably overused example, Google's really good at giving us information. None of us need to know necessarily how much data underlies. The second capability, once we have the information that we need that puts us in context continuously, is the opportunity to then take action. And what does action look like for all of us in a connected world? It's going to vary. It's going to vary by line of business, and it's going to vary by the estate, the gadgets that you use, the evaluation tools that you use, all the levers that Deb spoke about. But the actions broken down to and centering, being unified with the information, the must-dos, the can-dos, the I want-to-dos, and those that we say there's gaps in the current estate that an application should be able to do. So moving away from disconnected spreadsheets, moving away from disconnected systems, moving away from paper as much as we can, to be able to, again, automate some of this work, whether it's human or whether it's system. And taking action in context keeps us connected. A lot of times we hear people say, well, I gave someone that report. I give them that report so that they have X in context. But when you ask them where someone then goes once they're informed to do, they go to many other different systems to take action. So the two have to come together to keep us connected internally. And the third capability that we look at, and Joanne spoke about, was to work anywhere. So being able to work omni-channel seamlessly, whether work is coming in from our portal, mobile devices, or on our desktops, seamlessly working across in context and being able to take action anywhere, rather than being tethered or connected to a desktop or the portal being disconnected to everything else in the organization. And it's not just about being able to work anywhere. It's being able to work anytime. So we should be able to jump into work because we have the information and then take action. Wherever something is along the continuum, whether it's new business, whether it's something that's been started, whether it's something that I need to look at, we should be able to jump in wherever we need to jump into, whatever time we want to jump into it, and have it in context so that we can pick up and contribute our part to the bigger piece of work. And that component of collaboration, of everyone coming together, the people, whether they're inside or outside of the organization, that are contributing to it. The data and the processes that we need to run together to contribute to it all come together across any device to keep us connected wherever we are. And in these connected environments, to Joanne's point, people get a lot of time back because that's 65% of the time that we spend collecting information, calling someone, emailing. It doesn't all go away. We might still need to perform a certain function of that. We are still human. But we really get the time back to focus on what we do best and what we're hired to do for companies. So with that, I'll turn it back to Andy for any questions.
Okay. Well, thank you, Kate. And we do have some questions coming in, but I would encourage our audience to please submit more questions, and any that we don't get a chance to address in today's event, we will get back to you on. So please send them in. We have a question from John. I guess this is probably geared to Deb. He wonders, how is the 65% that you refer to managed for complex risks?
Yeah, so it depends on that underwriting platform, underwriting technology that is enabling that. So for that small percent that we saw in the poll and what I would see in the industry, many have an underwriting workstation or an underwriting workbench or what Kate talked about, like an Appian platform that sits and helps facilitate and bring all that connected information and processes together. Some actually purchase underwriting workstation software and some build it themselves. But those that don't, and by the way, those technologies are usually tightly integrated with the policy admin system. But those that don't have any technology, it's spreadsheets, it's emails. It's what Kate talked about, right? It's hunting in email, going on shared folders in intranet services. Typing in spreadsheets and tools and hunting and searching and doing Google searches. So it depends, but it's a variety of different things.
Okay, and I have a question from Paul. This would be for Kate, I think. He's wondering, how quickly are companies jumping at the chance to use Appian within their company, and is this a competitive market?
I think the insurance market is incredibly competitive depending on the lines of business that you're in, right? So personal lines is becoming marginalized and very, very competitive. There's other lines of business that are growing exponentially. So companies are starting to pivot towards different markets. We're seeing microinsurance on the rise. We're seeing specialty on the rise. So I do think, and by default then, as everyone pivots and moves, the market's becoming incredibly, incredibly competitive. In terms of Appian, are people jumping for Appian? I wish the world were jumping at Appian. Companies are still struggling, I think, with where they want to connect and what connectivity means to them. So folks are spending, as I mentioned, and focusing a lot on this concept of connected homes, connected cities, connected, sensors on refrigerators, this whole blockchain concept that's going around, IoT, and a lot of times they're missing the opportunity that's right in front of them, which is to simply connect their own organizations. So it's a concept that's taking on rather quickly. Like IoT seemed to sort of jump up very quickly. I presented in December at one of the first IoT conferences here in the U.S., and have now participated in 4 more. And historically, the insurance market hadn't really talked about IoT. So I would draw the parallel between the speed to interest to the speed to IoT and people really moving towards things they're going to pivot their business quickly and quite simply.
Okay. I have an interesting question here from Surajit. This may be for Deb. What is the role of cognitive learning in future underwriting, if any?
Well, I think there's great possibilities, right? This whole cognitive and machine learning, which will help with our discipline and some of the consistency that we talked about. I think we're a ways from that. We still struggle with a lot of the processing and underwriting and this risk analysis to use external news sources of data and models. We're really good at that for auto, some homes, some small commercials, some term life. But I think the possibility is amazing to be able to use some of these new technologies. But I don't see that in the next couple of years. Maybe some proof of concepts.
Mm-hmm. And I have a question for Joanne from Kevin. Wondering, what's the difference between the underwriting workflow system you started at Vermont Mutual and what you have now? Or with the underwriting workflow system you started with and what you have now?
Well, I don't know that we really had much of one to start. That was part of the problem. I think it goes to Kate's point about the connectedness and the lack of connectedness and all the different places that we needed to go to make those decisions. And it required a lot of clerical assistance to be able to get data in, to be able to be presented in our older system, where now it either is a better decision point that's presented to the agent when they're placing the business or administering services against the business, but also more importantly to the underwriter, that they're pointed to the data that they need to see to be able to make those decisions, and some of the things that are more commodity type coverages that we know pass the rules and is the profitable growth that we want, and it's good. They just go right through. So that would be my answer to that one.
Okay, thanks. I have a question from Sarah for Deb, and that is, what tools or technology do you see companies providing to underwriters to help them handle the work that the systems that they have do not help? 65% of the work.
Right. I think I already answered that, and that was tools like Appian, business process management, workflow rules, sophisticated rules. I see another question in here around the integration. So you need something that can manage information and data hubs. And some are buying packaged softwares, and some are using tools like Appian that have those really sophisticated rules engines and workflows.
Okay, thanks.
Mm-hmm.
And then back to Deb, a question from Vivian. When companies talk about being connected, what do they mean? Are they talking about connected with the outside world to the insurance company, or connected within the organization itself?
So it could be either, and I think Kate did a really great job talking about that. So we're starting as an industry to talk about the connected world and the Internet of Things, and conceptually starting to understand that concept. I think the term connected company, which I love, just in talking with Kate, I think it's a great concept, because I think it's a new concept, but it's one that should stick, because we tend to think silo, and the underwriter has to work in a connected department, in a connected company, in order to provide that ease of doing business to any customer. So I think it's a new concept, and I hope it starts to mature quickly. Okay.
I have a question. I'm not sure who wants to take this. I'll throw this out to the field. It is, the pushback I always receive is the issue of potential job losses as a result of introducing efficient technologies to business processes. What's your view on this?
I can take a stab at that.
Mm-hmm.
Because as we're rolling things out, I think that anytime the word automation comes up, people immediately think, well, that means they're going to do my job. So there's a lot of, with the transformation of these tools in this connected world, it's not only the technology that's transforming, it's our business that's transforming. So what we have found is that people that usually had traditional roles or clerical roles are being cross-trained and being grown within our organization to take on a higher level job, which is really good. But you can't help human behavior. People assume things based on certain words and just things of the past, perhaps. But the reality is, I think you have to be continually transforming and kind of reinventing yourself. And this is a highly serviceable industry that we have to be able to, that responsiveness. There's not everything can be 100% automated, and so there's always going to be those things that need to be done. And the better that can be, I think the person that came in that did the same old, there's always people that want to do the same old, and there's people that want to grow. And I think there's a lot of opportunity with the transformation, and especially with attracting new talent that we have to bring in. I think it's hard to bring people in that just want to do clerical. They want to have something that they're thinking and making decisions and being part of a solution. So I think there's great opportunity.
I'd like to just add to that. So that's one view, which is an important view, automating some of the raters, data entry. But the role of the underwriter, if you make, as Kate gave some of those statistics, and I talk about the 65%, what they're not doing is portfolio management. What they're not using is trying to understand why certain trends are happening in their book of business and applying analytics and wisdom and business intelligence. They don't have the time to do that, right? So if we can eliminate some of the redundant, manual, really basic tasks of even some of the more like underwriters, just think of the different activities that they could do that will bring us back to the topic of this whole presentation, which is all around underwriting profitability.
Right. Totally agree with that.
Mm-hmm.
All right, then. We have time for one more question, and then we'll wrap up. This is from Ken. He wonders, how much work is building the integration between the underwriting platform and policy administration, lab vendors, document management, underwriting rules, etc.? He says, we found this is the hardest part, regardless of which tools sit on top.
Absolutely true. The lion's share of the work for the projects that we're working on are web services, and we clearly underestimated some of that effort, and I would say that's what's causing some of the longer turnaround times for our implementations. The tool sets are great, but you have to, the devil's in the details of tying everything together for those things to work. So Appian's ready for it, but it's got to be passed that information, or it has to know where to send it downstream. So that is definitely, without a doubt, Ken, the lion's share of what our effort has been from illustration.
Thank you. And that is about all the time we have. I'd like to thank everyone for joining us today on our webcast, Underwriting's Role in a Profitable Insurance Business. And we hope you found this session valuable. And, of course, I'd like to thank our presenters, Deb Smallwood, Joanne Courier, and Kate Gingras, for taking the time to share their insights with us today. And a special thank you to Appian for sponsoring this web seminar. This is Andrew Mazur, and on behalf of Insurance Networking News, thanks for joining us, and have a great afternoon.